Good morning, and today is November 28, 2023, and it is Tuesday, a second trading day of this week. So yesterday we have it open at 454.65 and it's closed at 454 also, put it at 50. Right, so that's the yesterday right there. So it's a very 65, so 15 cents below. And today is open at 54.08, right, which is 42 cents below. And we see that in the London section right here, it make a huge out move, and then it going and it check the London low right there. Let's see it's recover from here. It can't continue the downtrend. We can see the continued downtrend. Yesterday, the whole thing right here, just trap the buy side and then it go take it. Yep. One of the trade that we forgot to review yesterday, it is this trade. You remember when we try to target your level, it never hit, but it hit at this moment at 1443. It hit this level. You remember twice, 1, 2. It did not hit. We surprised. We said, "Wow, what happened? We need to adjust our target." But actually, all that is trap. It will hit it. When you see the short setup coming, it can hit it, because it take all the buy side. Look at that. Soon it take all this buy side liquidity right there. You see, take the buy side liquidity, then it start go down, and the target will be this. And entry this is around PM, 13 hour. You see. Right there, that's the level entry. We put a sell stop, you see, and the perfect entry right here, and give you another add-in scaling right there. Perfect, and all go down. Finish right here. Yes, I think we did take a screenshot of that. Let's see. Yeah, so basically that's the trade idea right there. See that? This is our entry level right there. Put a sell stop, and we go in at 13.19 right there. That's the candle. Yeah, 13.19, and we exit at this candle. It hit this target level at 454.22 right there. So it's 443 right there. And look at the risk reward. We have 10R. Oh man, that's wonderful right there. But anyway, let's go back to today. That's what we want to show. When we look back the charts this morning, we saw that. So we just want to share real quick. So we are almost in first 30 minutes of trading, and it opened at 454.08 today. It's Tuesday. Wonderful Tuesday. 454.08, and it did take the London low out. So let's see. You're gonna recover from here, or we're gonna continue the downtrend. Okay, so let's see what we are gonna do, what the market gonna do. Right, we always come with the low risk trade idea. Remember that. We have to come up with a low risk trade idea, which is the total spread. That is a low risk trade idea. That's the fundamental. Fundamental of our trading system that we try to build. Or at first we try with the rule-based, discretionary trade, and then we're gonna automate it and turn it to a mechanic. So that's our roadmap right there. So the roadmap to develop our trading system, right? Is the first we're gonna do rule base, discretion. Discretionary trading, right? And then from there we're gonna move to the next step, which is we computerize, we automate it. It's gonna become mechanic trading system. Mechanic trading. Yes, that's what we try to do. Because when we do the mechanics, it will be it will detach, it's not completely, but we still execute the system, right? So we will detach our emotion. Trading. So that's an idea right there. So that's what we're doing right now. We are trying to build our trading system. First we start with rule-based discretionary, right? Discretionary trading. And then from there we want to automate them, we turn into a mechanic, because we want to detach our emotion from the trading. And that way, in the long run, it's better for us. We don't worry about one trade, but we just keep execute our system, because we have a positive expectancy. The more trade we execute, the better outcome for us. We not depend on any outcome of individual trade, but based on the system. So that's how we remind ourselves right there. And by the way, we start our starting point, or it will be a low risk trade idea. When a low risk, we're gonna do that low risk idea, and that's it. the accents of the turtle soup radar. Turtle soup is a low risk radar. Do 4 breakout. Turtle soup is a 4 breakout. Yep. It's just a more time that we can remember 1 hour. Believe that time is on our side, so we don't have to hurry. And when we put on the trade, we feel a loss. We want to be a loss first in our mind. Right? We just manage the loss. Where the loss, where the best location that we can give a loss. Every trade starts with a loss. With that in mind, we will better manage our emotion and expectation. I think Tom Harker, that's what his name. Tom Harker. Yeah, I think he said the best. He said best loser win. That's the idea of low risk idea. Okay, so we just add one of the belief in our trading system. The best loser win. I think that's the idea also we adopt from Tom Harker. If you read his book, you get an idea. Basically, I think this belief, it comes from this idea also. We need to identify the low risk trade idea right there. It's very low risk, but it can generate a huge reward, and that's where the expectancy come from. It's similar to the idea we are aimed for expectancy, not accuracy, right? Accuracy is about the win rate, okay? And the win rate does not matter, right? With so-called random system, 50% we still win if we let our wing run and cut short. Cut short our loss. The same belief that I think it overlaps with the belief that the way of the turtle. The author name is Curtis Face. He says the same idea about, no, not idea, but the idea of re-entry. You remember? So we cut long first short, then we can re-entry them. I think it's on this guy. You remember the idea that we are need to re-entry? Oh, I think we thought we put it in here. We did not put in here. Re-entry. Nothing. Okay, we need to add that in there. We need to add that into our belief. But anyway, oh, right here we see any low risk trade idea. Let's look on the 15 minutes time frame. Yeah, we can see, we can take a London low at a low risk right there. But for, hold on, it's 42 minutes now, right? 42 minutes. It's still in this range, right? This range, we have it right here. 453. 453. 453. 52. It can be for breakout at the level right here, right? A swing high right here. So in order to identify the low risk idea, we always try to locate a swing high and swing low. The last 20 look back, right, to see. Well, let's see it recover from here. Right, it opened at 454.08. So we see right here is a consolidation. I think you're gonna take this buy side liquidity. That's what we anticipate. Here's our pre-market observation. Here's the daily time frame or what 1 day time frame. You see that from this swing high to this swing low, it takes 90 days for it to decrease about 10%, right? 26%. But it only takes like 1/3 of that for it to recover. Oh, that's a lot right there. So this move is very fast and very quick, and we see a lot of gap in there. So is this move substantial, or it's just among the engineer move? It's just an engineer move to move the price up so it can fill the order for big customer, right? And we know that the market maker, the big institution, have ability to manipulate or engineer the price. Let's say they client want to sell at late level. They want to sell from let's pick right here 456 to 450. They want to sell 10 million, I don't know, 100 million something, because the average volume for SPY is 80 million a month. I mean, even per day. So maybe some huge fund that they want to sell it, so that's what bring up. But also there are another reason that they say that at the end of October or beginning of November, where the stock is likely to go up because of the mutual fund that receive all the money. The money is available or released from pension fund or retirement fund. That's where they go in and buy the stock to increase their portfolio right there. So that's the reason why it go up. But regardless of reason, if we look at purely from the number perspective, you see this move is so fast. Right, it only takes 19 bar. This is 72 bar, so it's 1/3 of that. So we see the velocity of this move is very fast. That's one thing that it can be a good setup to short, right? It can be 4 breakout. You see, it's 4 breakout. It did not close above that, so it looks like if we want to short, we can start building our short position now. Yeah, we say it's gonna take this buy side. Yeah, it did take this buy side liquidity right there. Yeah, it did the buy side right there. Let's see, it gonna hit this level. New wick opening up low right there. Keep in mind that tomorrow we are the GDP data release at 8:30. Let's watch how the market reacted, and then we have a I think the PMI. It's Midwest PMI. I think we have PMI on Thursday. Yeah, right here. Chicago PMIs on Thursday. So let's see how the market gonna react to those two data, economic data release later. So let's see what is so the pre-market today is not high at all. It's below 1 million. The average is 1 million share. So it's below that level. The same for yesterday. Yesterday only 679,000 share, and today a little bit better, but still lower than the average. 58. So it dropped 0.39% pre-market, and we are November 28th, so right here we don't have any this is the option expire at the end of month. So you see, as soon as it break the buy side, it move away. Let's see. What is the level? 53, 52, 53, 52. Oh, I see. So 53, 52 is it level. $53, $52 is this level. Yeah, 53 level right here. There's two big level right here. Now it's break down to level. Yeah, I think one of the belief that we just reason out of when we do research on the book Way of the Turtle, and it makes sense. Here's what the belief that we adopt right there. Your mechanical system is the best way to make money consistently in trading. If we know that our system make money over the long run, it's easy to take the signal, right? Take the signal, follow the system during a period of loss right there, or drawdown right there. But if we are rely on our own judgment during trading, we may find that you are fearful when you should be greedy. That's what they call. And this way he used more a nice word, courageous, or yep. So basically he say that our feeling is not reliable, right? Our judgment is not reliable when it's under emotion, especially in the panic moment, in the despair moment. We make the wrong decision, the irrational decision. But if we follow the mechanic system, and we test it, and that system have a positive efficiency, then it's easy for us to just follow the system, even though during the periods of drawdown, because we know that part of the process, a part of the system, but you have a positive expectancy. The win will cover all the loss, will recover all loss. So that's an idea. Follow. I think we have mixed the typo right here. Take the signal. 248, page 248. And follow. I think this is an and follow. Yeah, take a signal and follow the system. Yeah, I think exactly this level is a 4 breakout right there. Let's see. Oh, this level is a 4 breakout. Isn't this right? But who cares, right? As long as it's a low risk, then we just execute the system. We do not control the outcome. Nice set, right? If you trade that idea, then basically it's still in the range right here. So if we go in right here, what will be our target? Oh, it's got to be the sell side over here, down here. So it's 10:30 now. (10:30) Eastern time now, so we are in the Central time. So it's 1 hour below. I mean behind. But for the charts, we follow the Eastern time. But for our system, is the center time. Just in case you wonder, for a chart we adjust the time into right here. We adjust the time into Eastern time, but for our system, our Windows system, we go by the Central time. Wow, we don't have much conviction around here. Let's see, but who cares about our conviction, right? We just follow the system. Because the good thing is by now 10:30 is above the London low. However, it's still below the London high, so let's see if we recover from here. Or maybe this level gonna be a 2 breakout instead of 4 breakout. Yeah, it's the number one rule in trading is cut your loss short and let your profit run. Yeah, we need to adopt that belief. We need to cut our loss short. That's the low risk idea right there. Like cut the loss short and let a profit run right there. Cut our loss short and let our profit run. You are fearful when we should be courageous, or courageous when we should be fearful. So it's not a, if it's not a real breakout right here, it's 4 breakout. You see it up and down, but still not hit our stop loss right there. Wow, what is that? Wow, so this is a real breakout right there. So if we trade right here, it's a 4 breakout. If we turn out a real breakout, break up this level, then we should go in and switch side right away. That's the lesson learned for right there. Okay, let's take this screenshot, right? That's, what's the high of this one? High of this one. Yeah, as soon as we saw it close above that. Yeah, it looked like a real breakout. Wow, look at that. Wow. My goodness. 54.17. What makes it a real breakout? Right, we started this setup. It's a beautiful setup, right? So the high is 54, 554.20. Yeah. So we will call this a breakout. Yeah, breakout long setup. Put a buy. Yeah, when it below here, put a buy right there. Buy stop. What's so bad about that? Put a buy right there. 454. Oh, I see. Well, actually, we'll put the buy right here also, because you can use the open at a setup also at a level for entry 54.20 is a breakout right there, right? Look at that. Yep. And the target is a new week opening gap high at 455.10. So it's $1 move right there. Like if we do that, then what will be our stop loss? We can put our stop loss is 5 cents below the open 0930, right? The open 0930 at 454.08, right? 5 cents below will be what? 03. Okay. $4.54.03 right there. So we don't see. Let's take screenshot and we come back to measure what? Measure the risk reward ratio. Okay. I think we're gonna entry at this candle right here. This candle we entry right there. Yep, that's one for trade right there. So it's a breakout. Setup 28-23 and it's a Tuesday. And the entry time is 10:15 for now. I think it's more than 10:15. Anyway, 20, something like that. Okay, so if we do measure right here, we entry right there. So entry at 54.20 and then go down to 3, right? Yeah, just 20 cents. Matter of fact, 20 cents, right? 20 cents. And how much we gain? we went 19 something, so it's very good risk reward ratio right there. Yeah, 0319, we go at 20 actually. We go in at 20 and our stop loss at 03 right there. So it's a 17 cent, and look at this, wonderful. Yeah, the risk reward is 1 to 4 R right there. Wow, look at that. And the entry time 10:38. So basically it's a breakout, right? Breakout, long setup, entry time 10:38, and the risk reward ratio is 17 cents, and we got 93. 4R right there, right? 1, 2, 4, 4R. Yep. Let's save this one. $38, right? Not 20, 38. Yep, we just got that trade right there. But let's look close a little bit. What makes it a, we try to short them, right? We saw it's 4 breakout, but what make it a breakout right there? What's so bad about that, right? If we go in, here, I see. Okay, we have 2 accounts, right? The first account we're gonna do is we short right here, and then the second account we're gonna do what? We put a buy stop in here. So we do both position right there. That will help us to capture the move. Right? Either direction, we're gonna capture the move, right? Because we are in this critical time at 10:30 right there. We know what the high and the low of the day right there. So if we are look at the 5-minute time frame and the DR model, you see it right there. And it boom right there, 40. So it's going a retest right here. But if you see the pattern right here, what makes it a reliable? What makes it a real breakout at the level right here? Yeah, 454.16. 454.16. 454.16. I think around this level we do 20 right there. Right, 16, maybe this one. Yeah, this is the level. Okay, the reason why we see this is a real breakout, because we see it did take we see that it did take the sell side liquidity, it rate the sell side liquidity, right, and it dropped the buy side. You can see that. So that gives us some idea right there. So sell side liquidity will rate it and buy side liquidity will trap it. So that give an idea that that's the condition right there. So we can say right here, I mean later on we can look back and see more factor, but let's go with it right now. It break out long setup, because we see the condition is the buy side liquidity will trap, and then we see sell side liquidity will rate it. So that's the idea right there. And then the consolidation right there, consolidation is around the open at 9:30. So that's the two things that we see right there. Okay, first and second we see that our observation right there. Yep. So we can say that breakout because reason for entry, right? What the reason we try to entry, right? That's the reason right there. We saw that, or at least we saw after it happened. So next time if we check the condition is there, then we can check the trade confidently with strong conviction right there. And it's a good residual ratio right there. All right, anyway, we need to wrap up here. It's 1 hour already. Thank you for your time and interest. We're really grateful for this opportunity to study markets and be a industrious student of the market. Bye for now and have a wonderful day. Talk to you later.